What's up, everybody? It's Ashley Reeve here. I am with my brother. I'm not running solo.
Always. Hi, guys. I'm Tepo. Welcome to the session. Hey, you got me there. You got me. I thought you were going to just say a few things.
Before.
Yeah.
All right, guys.
All good.
Well, guys, look, like T said, it's always good to be here.
Yeah.
This is episode 10. Wherever you're streaming in from, we're streaming live from Johannesburg, Sandton. Remember, you can catch us on YouTube if you'd like to check out what we've been doing.
Yeah.
And don't forget to drop those comments. Make those comments. Say what you'd like to see. We are here for you guys.
Yep.
Brother, how has your week been? Crazy?
I would say my week was just all right. In terms of the chart, it was a little bit funny, crazy. I don't know if I should use the word funny, but it was just a little bit crazy. But overall, just all right.
Was it? Did you also experience like inconsistencies?
That's what I'm talking about.
Okay,
it's a little bit crazy. Yeah, you know, for some reason, the first 2 months of this year on the charts, it's just been crazy.
Technically speaking,
some movements are not making sense.
Yes,
but it's all right. We adapt.
Do you remember when we spoke about the correlation, which was the last session?
I think, yeah.
They weren't 100% correlated.
Well, it was.
Did you find they were still okay?
What I found was, USD JPY was lower. Gold moved. USD JPY was low, and then silver, it went in the opposite direction. So as gold was pushing up, silver was dropping, and which is not the case, right? And USD JPY also, if gold is going up, that should drop, but it wasn't dropping. It was just ranging. So it was a little bit strange, slow at the same time. But hey, that gold push to the upside, that was the one.
Look.
In terms of the DXY also, I've been checking the DXY as well. It's trapped in a correction, right?
Yes.
It's slowly going up in a corrective.
It's very, very gradual. Yeah. Very gradual.
And Euro USD, it moved at some point, but also started correcting. So just been getting these movements, man. But you just need to monitor. Wait for your confirmations, then you're done.
Yes.
Yeah, man.
So, guys, I mean, it's been a bit funny. The money's been a bit funny, but that's okay. Like I mentioned, we're streaming live from Johannesburg, Sandton. Just to quickly go back, this is episode 10, guys. And we are extremely excited about today's topic. It's a topic that's, can we say a myth? Can we say a mystery? Can we maybe say it's misunderstood? Can we say it's misled, misguided? Because like you, I get a lot of questions about where do we do this? Where do we place it? What's the best one that you can? Because the word best always comes up. I don't know.
Always.
It's always
perfect. Word perfect.
Guys, I think I'm gonna take that. What's the perfect place? So we can let's get into the topic. It is entries and exits.
Yeah. Entries and exits.
Entries and exits.
It's gonna be a fun one.
It's a fun one. Yeah. So, guys, just to go back on T's word there, what is the perfect entry? Yeah. What's the perfect exit?
Yeah.
Can you maybe just break that down a little bit?
Let's
on
break
your
it
side.
Down.
Yeah.
So when you talk about the entries, the word entry is basically to enter into something.
Yes.
So in terms of the markets, when you talk about entry points, we're talking about an area where you're going to enter into the market, enter into the position, right? That's essentially it. So entry points, that would be your buy and sell. Those are entry points, right? And
Okay. So entry, it's where you entered. As T says, I agree 100%.
Yeah.
All right. Also access, it's where you access that setup that you've created, obviously, because the setup needs to be created and then you access it by entering.
100%.
Now, before we get deeper into entries, exits, right? Let's just discuss the structure of a position, what that looks like, because some guys they can't differentiate between the structure of the market and the structure of a position, and it is different. So if we say the market structure, that's obviously your key levels, your higher highs, higher lows. That's the market structure.
Sure.
Let's talk position or the structure of the position.
Yeah.
What does that look like? Would you agree with me if I say the structure of a position is there must be an entry, there must be a take profit, and there must be a stop loss. That's what it would look like from an image perspective.
Yeah.
Not so much the management thereof, because the management is different. You're already
Something
in the
different,
market,
yeah.
it's done. But what it looks like is entry, take profit if you're buying on top,
Yeah.
stop loss at the bottom, and vice versa.
Yeah.
Anything you want to add there, bro?
That's actually the structure of the position. Just mentioned it right now.
Yes.
So
Yes.
so you spoke about take profit and stop loss.
Yeah.
Those will now be exit, right?
Okay.
Our exit points.
Yes.
So when we talk about the structure of
Aha.
a position, first of all, let us break down what a position is.
Aha, there we
So
go.
that they understand. So essentially, a position is a trade, essentially, right?
Yeah.
When you talk about a trade, you're talking about a position, and then we're gonna get a little bit deeper into talking about the position size and so forth. That's for another day.
Yes.
But a structure of a position, let's look at a long position, which
Go
is
for
a
it.
buy.
Yes.
Right? So a buy position will make profits when the market goes to the upside. Right? That's the nature of a buy position. If the market drops after putting in a long position, it's not going to make profit. It's going to
Yeah.
be running in a loss. So as such, we want to be making profit when the market pushes to the upside. So now this is very important, and I get this question a lot. Why don't you leave the trade when it's in profit? Why don't you just leave it run? That's a very tricky, dangerous approach to the markets.
Oh, yes.
Because now, we are trading the things that we do not control. We don't have control over the outcome of the position.
Yes.
So we take a buy, all right? We're expecting the market to do what? To push up. So therefore, we should have a predetermined target area
Yes.
for us to exit.
Predetermined. Guys,
yeah?
predetermined.
Predetermined target area for us to exit. Now, in a long position, that target, because we're pushing up, it should be above that long order,
Yes.
that buy order.
Yes.
Right? And then, as I just said earlier on, that should the market drop after placing a long, that's going to be running in a negative. So now our other exit point, which is a stop loss, it's placed below.
Below
right?
the entry now.
Below
the access point.
Yeah. Below. So initially, a stop loss is what we use as traders to limit our potential losses.
Yes, correct.
Right? The moment you go in without a stop loss, that's when you have 100% exposure on your position.
Yay. It's like jumping out of a safari car
Yeah.
in the middle of the Serengeti,
yes.
or these nature reserves, like at Lanseria, they have that lion park.
Yeah.
You in the comfort of your car, and now you decide, I'm going for a stroll in the camp where the lions are. You 100% exposed.
We'll read about you somewhere. We'll read about you somewhere. You're going to be a statistic, So,
Got you.
So stop loss is that protection we need should we want to get out. In fact, we shouldn't even get out of the car. Right?
Exactly.
We
Just
shouldn't even get out of the car.
stay in there.
Yeah, stay in there.
Stay in the
right?
car, yeah.
So a stop loss is what we use as traders to limit our potential losses. Without a stop loss, you are running the risk of having 100% exposure on your position, of your account, of course. So stop loss then is placed below your long order, take profit above. That is in a buy position.
Yeah. There we go, guys.
Yep.
Sell, you want to
Sell
maybe,
position,
sell is vice versa.
Now
yeah?
it switches around now. So when you talk about a sell, we're talking about a short position.
Yes.
And for you to profit from a short position, we need the market to drop.
To drop.
Right.
Got you.
So the market drops, we need a predetermined area of exit.
Yes.
To take our profits, right? Automatically secure our profits. So now in a short position, take profit is now placed below because we want to go down.
Yes.
And stop loss placed above.
Okay.
That's the structure now.
That's the structure, right? So in essence, guys, if you're trading currencies, if you are buying, it means the base currency would be stronger.
There we go. 100%.
If you're selling, the base currency would be weaker, which means guys are putting their money into the quote currency, which is on the right hand side,
Yeah,
right?
So they are dumping the base for the quote.
Exactly. So guys, and this is basics, all right? You need to get in with us at the academy if you want to learn more about what we just mentioned, all right? If you're a beginner. Now that we understand the structure, more in theory actually, because obviously in the classes we go into detail where we show them what the visual looks like of the structure, right? Which we will try and actually show something just now.
Yeah.
Let's just discuss the entry point and let us discuss the exit point now separately. You mentioned earlier on the entry point is the place where you enter the market. I added to your truth there that it's an access area after your setup has been done. Do you find something like a perfect entry in your opinion, team? Because that's the thing we get a lot of those questions. I'm trying to find the perfect entry point to my setup.
And this is what I always say. If there was anything such as a perfect entry, then we need to have control somehow of the market for us to get that perfect entry. Because now we are trading the markets that we do not control.
Yeah.
Right? Such as we don't have control over the outcome of our position. So there's nothing as a perfect entry.
Nothing. It doesn't exist.
No, what we need to understand is what could happen after we've entered a position. There could be a situation where the trade goes immediately in your direction, or sometimes the market will just take its own time before it moving in your direction. So now people think when the market moves immediately, that's a perfect entry. Not a perfect entry. It's your entry according to your strategy.
To your strategy, right?
So if now, according to your strategy, we made an episode on that, talking about the backtesting and all of that. If you understand what happens, the things that happen after you take a position, then you will know that sometimes the market, yes, it will go immediately. Boom. Sometimes it won't go immediately. You have to wait like 2 days, maybe.
Exactly.
Right?
A week.
It can happen. Sometimes even 2 weeks.
Yes.
It can happen.
Absolutely.
Right? So now, I don't think there's anything such as a perfect entry. It doesn't exist. And the problem here, my man, is, like you said, we get questions on a perfect entry, right? And this is especially traders who are starting out in this business.
Majority, yes.
Yeah, who are starting out in the business. And you know, before they joined us, maybe they got knowledge from somewhere. Maybe let's say YouTube, Google.
Yeah.
Right. And there's a difference between theory and practical. Theory might tell you that if you enter here, there's a perfect entry. But practical doesn't work like that.
Yeah. Yeah.
So there's nothing as a perfect entry.
I agree with you 2000%.
Yeah.
No such thing as a perfect entry.
Yeah.
I find a good entry exists.
Yeah, you know, there are good entries.
There are good entries.
Yeah.
And just to attach some truth to the good entry,
Sure.
you must consider spreads.
All right, yeah.
Because spreads plays a very pivotal role in if you're getting in after 15 pips, if that spread is 15, 20 pips, that's very wide. But if you're getting in after 2 pips and your setup is solid, that's a good entry.
Okay.
And so that's the technical side of what a good entry looks like.
All right.
The imaginary entry that we get on YouTube is when guys will post a screen and say, accurate entries. But what they actually posting is the profits, not so much the entry. Because they can't, it's just like you said, they can't control the bid and ask.
Yep.
The broker, licensed broker like us, we get our feed. And that is based on what is happening around the world.
Yeah.
Where's the attraction, the attractiveness of buyers and sellers?
Yeah.
What is the depth of market? And if you have a price at 10 Rand, but the depth of the market, no one is interested in buying at 10 Rand. They want to buy at 2 Rand.
There we go.
In between 10 and 2, there's that 8 Rand difference. If no one is interested to get in there, you're the only one. Your position is not going to be triggered. You have to wait until price goes down before you can actually enter, right?
Yeah.
So there's a technical side. But the guys that are posting big profits saying accurate entries every single time. Not that we're hating on the guys, as we always say.
No,
as we always say, but we want to be transparent and say that what they actually saying to the people, it's not that it's a perfect entry. It's the fact that they entered and they made X amount of money, 10,000 US dollars. So it just has the image of a perfect entry. But in actual fact, it's just they made a lot of profits in that specific sense.
And let me just jump in there. So yes, I've seen things like that, posts like that. And my question then is, what is accurate?
Aha.
That is the question.
Come on, bro.
Accurate entry. What is accurate?
It's subjective.
Because now, you know what I've seen, and no disrespect.
Of
That's
course.
what I've seen in my trading career, where exactly people would post that, right? Show the profits, of course, and show maybe the chart. And where the chart is at the time, it might seem like the market moved immediately upon entry.
Okay.
Whereas maybe they entered on last week Wednesday, and the market maybe went down a little bit. They didn't post it.
No.
But now when the market moved today, they posting it, and it seems like the market moved immediately.
Exactly.
That is
So you're not in the person's account history. You can't see the date and time as you mentioned, right?
You can't.
Now, look, now it goes back to your question. So do we define accuracy like that then? Because we've been in classes, we've been in live streams where we enter, for the most part, the market has enough volatility that time and liquidity to push our profits, right? But then we've had our first two NFPs was just ridiculously slow.
Yep, 100%.
We would have
100%.
we are perfect in terms of where we want to go to, but the market just doesn't have that movement that we were looking for in that time. And then 4 or 5 hours later,
on,
it goes in that exact direction. So now do we define accuracy like that now? You see, to your point, how do we define then accuracy?
You know, we can say our analysis is accurate, right? Let's say, for example, we say GBP AUG is gonna go up, and it went up. That's an accurate analysis. It went up, right? But now it boils down to exactly where do you think it's gonna start pushing up?
Yes.
If we can find that, then we found the accuracy from where it's gonna start.
Is that a fantasy land to you? Because, and the reason why I asked, just to back up that question, this is how I see it, right?
Yeah.
If my setup plays out, whether it's a day later, 3 days later, 5, I was accurate.
That's it. That's my point.
Exactly.
That's my
if
point.
If it played out according to your initial analysis, you were accurate.
There we go.
And you've mentioned this before, where duplicate what works. You've said it. We've had, I think it was podcast 7 or 6, I can't remember, but you said backtesting. You just brought, you said, take screenshots. I remember that very, very, it's a very critical one.
Those are gems.
Those are gems. Take 5, 6 to 10 screenshots of every time your setup played out. That's accuracy. So we cannot be looking at people that makes $20,000 profit. Great, double thumbs. You made your 20 G's, right? But you can't rely and say that's the only way to be accurate. You have to subjectively look at your setup and say, at that specific point, if it hits it, I'm accurate in my setup. Which now comes back to this question that I have. Because I think we've successfully answered it theoretically. Practically, it's a different story, right?
100%.
So entry is at that point where you gain access that's dependent on your setup, number one. Number two, the bid and ask, because you can't control that, right? Number three, if you don't have enough money at that particular time, let's say you have $100 and you want to put one standard lot in there. Your entry at market execution at that point, your deposit is not enough to facilitate that entry there. So that's a very technical side of seeing it. So your entry gets jeopardized. Immediately it will say not enough money. Now you need to go back and you need to deposit more money. And then you come back. But by then the bid and ask is moved, which means that entry, perfect entry, is totally void now.
See?
So now you need to wait for another place to enter based on the depth of market, based on what's available.
See?
So guys, I hope you're seeing that the perfect entry doesn't exist. Doesn't exist. All right? There's good entries.
Yep, there's good entries.
It's dependent on spread, all right? On that broker that you are using as an example now. If it's nice, low, narrow spreads, because I think we mentioned that in the last episode, we said we're looking for tight spreads.
Of course, and all our accounts have that, by the way.
All our accounts have that, by the way. Gold Pro, we just had to put it in there, guys, you know.
We just had to.
So that's entry.
Yeah.
Exit. Is there a perfect exit? This one is so powerful to me. I mean, I can't wait to just go into it.
Like overall, I don't think there's anything perfect in the market. Right? We can look at the back data and say, okay, the market moved like this, that is perfect. But as it was forming, you wouldn't really know exactly 100% that it's going to be as perfect as you saw it before.
Yes.
Right? So I'm saying this to say that when it comes to exits, number one, stop losses are not the same all the time. I'm saying this because I've seen, no disrespect again, a lot of traders saying they put 15 pips stop loss on every trade, 20 pips on every trade. Now, we then want to see how it played out because, we cannot control how the market will move after that. Sometimes it might play around.
Yeah.
And what if now it drops 15 pips before it goes up?
Exactly.
You are out.
You out.
So what I would say, stop losses, they will depend on the setup you're trading. That's number one. Whether it's a pattern, it will depend on that. And before you understand where to place it, it's important that you understand the setup you're trading.
You're trading.
Right? Fully understand it. Like
and the risks associated with that setup. No?
Everything fully. Right? Fully understand it. Right?
Yes.
And then if you understand it, then you will know the possibilities after you've entered an entry, what the market could do because you've seen how it played out.
Yeah.
So your your stop loss on a FIP trade, let's say the market has retraced to maybe the 50% FIP level, right? About to continue the trend. And depending on what will happen there, sometimes the market might not do the same thing before it goes up. Sometimes it might create a channel, right? Maybe drop a little bit to 61.8, then go up. Sometimes it might reverse immediately.
Yes.
So now your stop loss on a setup like that will be different to maybe a support or resistance.
Yes.
And maybe whatever you trade, a moving average.
Yeah.
It's going to be different. It's not the same. And again, there's no perfect exit.
There's no perfect exit.
If it's perfect, then there's someone who does insider trading.
Yeah. Hey.
Who does insider trading?
And
then they would know.
They would know, and that means everybody would be making a ton load of money because it's known, right?
Yeah.
So exit is where we exit the market.
Yeah. Whether risk or reward.
Risk or reward, 100%. Now, brother, I had this thing with an exit where I became obsessed with how people would make and say, it hit the TP, exactly. And I would always ask myself, when I just started out, how did these guys get it right? The accuracy is insane. And we have to break it down maybe for the guys to say that when you are doing swing trading, a take profit may be necessary. But when you're scalping, the exit to a specific level is maybe not necessary. So a lot of the guys that are scalping will say, here's my take profit. But in actual fact, maybe they just exited right before it hit that specific area.
Most of them, they use manual exit.
Manual exit.
Because the art in scalping is you are targeting small pips, small movements.
Exactly.
So you might go in with a bigger loss. So you in the trade, you monitor it, it goes up, you can see the exit. Boom, that's scalping.
Yes.
Yeah.
Now, the guys that don't understand what type of trader they are yet, because remember, we are always dealing with guys that need to locate themselves.
100%.
Are you a short micro level trader, scalping? Are you medium swing trader? You using the maybe high daily 4-hour time frames? Or are you more long term, 6 months plus now, using monthly and weekly time frames? So they need to locate themselves. Now with a long term trader, so to speak, they will obviously use take profits more because it's position trading. They're leaving it to run. They don't necessarily need to get out manually. They just watch it, right? I had a trade on Netflix that I was dealing with the guys 6 months ago, bro.
Yeah.
Netflix only hit that area now this week or this month. But it's been traveling up from $400 to $600. And I say to the guys, this is a long-term position, so to speak. Hold this trade. There's nothing wrong with you holding it. And it actually went to that zone monthly, weekly time frames from a stock perspective, right? But we do NFP, we do CPI, and we're dealing with 15-minute, 5-minute, and 1-minute time frames predominantly. And that's what we trade, right? Now, exits. I think the mystery is that people think that if you use the term exit, it's more for your take profit. But an exit is also a stop loss if you are manually doing it. And I have an example of what I'd like to show the guys on what they can possibly implement when it comes to finding your stop loss levels.
100%.
Because would you agree with me, bro? Maybe just whilst I get this chart here, maybe don't you just want to chat a little bit on stop loss and the risk associated with a shorter time frame versus a more medium time frame, like your 4-hour versus your 5-minute in terms of pip distance now?
You mentioned the word micro just now, and when you're dealing with micro levels, we're looking at your minute time frames.
Yes.
And then when you deal with more of swing trading, we look at the 4-hour. Now, we need to understand that there's difference in pips there from the lower time frames to the higher time frames. So if you're trading the 5 minutes time frame, you're looking for your trend there, your setups there, and boom. Chances are your stop losses are going to be, let's say, maybe 10 pips because of that time frame and how the pips are so small on that time frame. But now, we cannot afford, even if we see the very same setup on the 4-hour, we can't afford to put a 10 pip stop loss because of the nature of the time frame.
Of the time frame, yes.
Yeah.
Got you.
So it's very important that we understand this point now. All right. So now on the if your stop loss is 10 pips on a 1-minute time frame, right, or 5 minutes, then on the 4-hour time frame, chances are is that your stop loss is gonna be maybe quadruple that, maybe triple that.
Triple that, exactly.
Maybe, yeah.
Exactly.
Because of the nature of that time frame.
Of that time frame.
Yeah.
So the distances are further apart, the higher you go, and it's
go.
shorter the lower
100%.
you go. All right.
100%.
Now, guys, T said that beautifully because that brings us to this point. So I just wanted to thread that with this. All right. So
Sure.
if you check on your screens, I currently have the Euro USD on. All right. Now, T, I have a TP there. Take profit exit of 1.10376, all right? But what price has done here at this support level at the 1.06998 area, it's found support. Now, would you agree with me, bro, if I say a lot of guys, when a price retraces, they have the fib, but they don't really put a title to the number to give more perspective.
Okay.
All right? So these levels that you guys see here, that's the flat, shallow, sharp, and deep way a retracement or correction will actually go down after it's hit that specific high. Because the high gets hit over there, and then at every high, 90% of the time, when a high is hit, price will retrace from there. So it's not necessarily, I don't want to call it a rejection, but in essence, it's rejecting the high for now. It's retracing to come back later to create a higher high.
Sure.
Which means that high is now approved by the buyers to move from this level to the next level, right?
Yeah.
Okay. So a way to possibly get a stop loss is use that fib to do it. But you got to first get your take profit level. Make sure what you spoke about, the distance is far enough. So look at that take profit there. If I, from that area, and I take it up, that's about 180 pips. From that candle right over there, all the way up, 180 pips, right? So half of that would be about 90 pips, which means that if you're going to buy at that zone there, you're going to make a nice 1-to-2 ratio. If you can take from your crosshair, from that low, let's say your entry is perfectly there. So from there to about there, that is where your stop loss would be.
That's a good stop loss.
That's a very good
That's how I
stop
would
loss.
put it.
Exactly. So now if we look at it from a risk management perspective, look at which area it went to. Between the sharp and the deep area. Look at that. So 90, let's get 90. Right over there. Do you see that?
Yeah.
So it's in between the sharp and the deep zone. But what people normally do with this, right? Once price has created that high, all right, they normally then enter the market already.
Like on the high.
On the high, which can be a challenge. All right. Because the moment the high has been created, they enter, but then look what happens. The rejection starts.
Yeah, okay, yeah.
See?
Yeah.
So there's nothing wrong in entering the market, but you must know that the breakout normally has two phases. It has the thrust or the impulse, like you like to call it, to the upside. And then the second part of the breakout happens where there's a rejection or a retracement.
All right.
So the guys get in the first part of the breakout, which is the thrust, the impulse. Then price retraces, and then they get kicked out. But just like you said, 15 pips down, price goes up again.
Yep.
So without understanding that the breakout phase is twofold, they are consistently not getting their setup done and they become frustrated.
And then also on that note, it's important also when the market breaks a level, again, you can never tell exactly what's going to happen, but it's important that you understand your confirmations and what will confirm to you that we've got a break, we are about to continue.
Yes.
You mentioned that a break and a retest can happen. That is the possibility, right? Sometimes the market will break and form a correction without retesting it, still go up.
Absolutely.
It's important that we understand, well, what exactly will confirm to us that price will go up or will go down.
Now, bro, you're hitting the nail on the head because I'm about to get into that by showing
100%.
this now. Now, if I zoom in here, right?
Yeah.
To that zone, because that's where we want to be now, right? We shouldn't get in prematurely because we spoke about market structure versus the structure of a position.
Yeah.
The market structure is such, we know when the high has been created, once the higher high is formed, then we have a follow through, a stronger signal that we're pushing now to the upside.
100%.
Now that is where the midway comes in. When price, in this specific example, everybody watch this. There's my line chart. I've just created a horizontal level at that specific point. Now take note of that high and then take note of what we want to see. When price breaks above 1.08576 and creates the higher high, the probability is that price is pushing up. That is when we want to possibly enter the market now. But now this is where we break it down with the stop loss. Because the market has now broken above that high, I now, after I've entered, take my fib and I measure the previous high. Because remember, the probability now, because of the higher high that's been created, price is more likely now to push to the upside, which means it's already done the retracement. Which means if I place, as an example, my stop loss, let me just get this crosshair, sorry guys. So from there to there is 36 pips. So I'm literally using the fib now, because the 23 means it's a flat retracement, 38 means it's shallow, 50 means it is sharp, and 61 means it is deep. Now, if price has already retraced and then creates the higher high, the chances are likely that it's not going to return back there again because it's already been there. So if I enter a position now, as an example here, right? Let's just say we went and we said, okay, let's just enter a position here. 10 standard lots.
My man.
All right, we buy. Are we together? So look at this risk and reward. So from there to there, there's my take profit now, right? That's 185. Now, if I take that same, remember, it's now broken the high.
Yeah.
So the probability is it's not going to come back down because it's already retraced.
Yep.
So I take that same one and now look, 180 US dollars versus a loss of 30, 53. This one is 70. So if I were to place my stop loss at the sharp, not the deep, look at that risk and reward now.
I was about to say, risk and reward is still in your favor.
It's still in my favor. But the reason why, because I go back to your powerful question.
Yeah.
What is the signal that price is now to resume?
There we go.
Only when price creates the higher high.
There we go.
If it has not created the higher high, the chances are we're staying in that rejected zone and price can go down to the deep side. And if you enter that buy beneath that high,
Yeah.
the chances are it's going to hit your stop loss.
100%. I fully agree with you there, my man. You mentioned a very powerful word there, probability.
Ooh, okay. Talk to me. Talk to me, yeah.
All right. And that's what the market is.
Yes.
It's just a game of probabilities.
It's probability.
All right. It's probability based. So now what you did there is because of your confirmation that price is going to go up.
Yes.
You got the highest probable scenario of what the market could do.
Exactly.
As opposed to what it's not going to do.
Exactly.
Like, for example, if we break that high, we go up. That means there's a high probability that you're going to go up as opposed to going down.
Exactly.
Right.
Exactly.
We always looking for that scenario where it gives us the higher probability.
Yes.
Should now we find a setup that is 50-50, then that's it. The market will go either up or down.
Exactly.
It's all about probabilities.
Exactly. And so this fib here, because people normally just use it for a retracement, which it's obviously it's been designed for that. That's what we do, right?
And it's such a powerful tool. You can use it for almost everything.
For anything related to price action, right?
Almost, yeah.
So using it as one tool, because there are many, right? That you can use to create a stop loss level. It's accurate. Instead of guessing now and saying, okay, I think I'm going to put my stop loss beneath this area here. Or saying, no, you know what? I think I'm going to rather just place it over there. There's no risk and reward to that. But the fib makes it so accurate where you can put a deposit down, 1, 2, get 180 US dollars, and then only risk about $50, which is a 1 to 3. Basically risk and reward. Because 50 goes into 183 times, right? So it's a 1 to 3 risk and reward ratio using tools that is very accurate, all right? But then I think the key part is we go back to market structure. You are trading the market structure.
There we go.
and you are waiting for key levels to be broken.
There you go.
So in this scenario now, let's go back to it.
Yeah.
Is there such thing as a perfect exit? Based on what we've just done here.
Well, so now, and that's a very good question based on what you did.
Exactly.
Right. So now, because now we've added tools now.
Yes.
Which then gives us a statistical edge.
Uh-huh.
Right. I mean, the Fibonacci right now, it's giving us an edge.
It's giving us an edge.
Price has rejected this. There's the shallow, right?
There's a shallow side, yes,
Right.
already before.
Already. And
yes.
not once, not twice. I think it's 3 times.
3
now.
yards, yeah, exactly.
So that gives us an idea of that buyers have been stuck there, have been trying to buy there. Now they are now in control.
Exactly,
right?
bro.
Now, for what we and that's made possible from the FIB or by the FIB.
By the FIB.
Right. So now, can we say that's a perfect exit? If we use tools, then we can spot an edge.
An edge.
I would say that's an edge.
It's an edge, not a perfect situation.
Not a perfect, but an edge. We used this tool to find an edge.
An edge. Okay. So now, with this being said, bro, a question here. Buy zone, sell zone.
Yeah.
Can we maybe just talk a little bit about that? Because what I found is that price, your entry should come after the buy zone has accumulated enough data.
Okay.
All right. So if I actually go back to the charts, all right, this area here, this zone, is a buy zone for now. So the buy zone to me is like a promotional ad that companies put out.
Yeah.
You know?
Yeah.
So the moment I see a buy zone, I'm like, this is going to attract people to come and buy this gold because it's now reaching that consolidation, just like it. So it came down, hit the shallow side, went up, came back down again. Like you said, 2-3 times, even more, it's touched. This is a buy zone, but it's not the moment to buy. Only when price creates the higher high, that is when the buys must come in. So the buying and the selling zone to me is the attraction phase. Let's get enough interest from the investors, but don't buy in there yet because it's still in rejection. So if you buy in the buyer zone, you might still get rejection.
Got it. I understand you. Yeah.
You see that, right? Yeah. So the moment it pushes up, now it's out of the buyer zone, it's now into entry phase. And that's where a lot of premature trades and positions are actually taken. In the buyer zone, in the seller zone, without waiting. And you've mentioned it many times. Guys, we're waiting for the lower high to form first. See, that becomes a selling zone. It's not necessarily the place where you sell. Can you sell? Yes.
Yes, you can.
Can you buy? Yes. But the risk is inflated now.
There we go.
You saw the risk is higher.
Yep.
But if it moves out of that zone now, now it's like a safety zone. You know, like with the COVID, they had this quarantine zone. Don't go into that place. Don't go there. Because the chances are you're more likely to get infected.
Exactly, to be infected.
Would you agree with that, bro?
Yeah, look, completely agree. And you know, it might come in different formations. Like
Yes.
this one here.
Yeah.
Understand when you're saying, okay, we trapped inside that high and that
Yes,
low.
yes.
Right. So we're in the buy zone, but now since we have not broken above that zone,
Yes.
there can still be a rejection.
Exactly.
Right. So we acknowledge and then we understand, okay, this is what's happening. But now, is it time to enter yet? That is where the question is. So your buy zone would then be, right, so let the market accumulate what it needs to do. Let the market reject what it needs to do. Let the market do this. But once then we break out, then there is there's no perfect, but a good area.
A good area.
For you to find that buy zone.
Exactly.
Same with the sell. If this chart was inverted,
Yes.
we'd be looking at the sell as well.
Exactly.
Yeah.
So guys, remember, if it's in the buyer zone, you wait. Can you trade? Absolutely. No one can force you. It's at your discretion. It's up to you. But once it's broken above, now you go to the previous high with the FIB and you find a stop loss based on the previous high, not the higher high.
No.
Because the higher high must still retrace. Because it hits the higher high and comes back down. You can't put your stop, unless you want tight stop losses like you mentioned, then it's a different story.
Yep. Yeah.
But if the moment it breaks above higher high, you go to your previous high, you take your FIB from the low to the high, find your flat, your shallow, your sharp, and your deep pullback areas, which is those numbers, right? 23, 38, 50, and 61. And then you can look what the risk and reward looks like. If it is doable and you have a nice distance at 110 versus 108. That's a fantastic setup, bro.
That's a very powerful concept that you just broken down there.
Yep.
You know, and this is exactly what we do on our sessions.
100%.
Right? It's a very powerful concept. I hope the guys got that.
I hope they really got it. And guys, if you want more detail with this, it's like T said, you have to get into the sessions so we can deliberate. I mean, the podcast isn't enough for us to go into detail.
Yeah.
And we do test trades. We do trades with the guys so that they can see it, right?
100%.
Now, bro, on that note, I think, would you agree? I think we actually got our point across with the entries, exits for now.
Exits, yeah.
All right. So one more question.
Yeah.
How to have consistent, accurate points to the specific exit. So let's say you have one trade and you have two, you have three, and you got accuracy in terms of you got in and you made your money every single time. How many setups would you consider to be the accurate number that says this setup is actually working in my favor? Because some guys will take two and say, I've done it twice, it works. Other guys will do 50 trials. Is there an average? Is there just a median in between that some guys can start off with? Because you know the whole 10,000 hour thing, if you've done 10,000 hours of something, you consider really good in what you do. So just to help the guys, is there a number that they can test and say, let me do it 30 times?
And I think we spoke about this on our when we had a session talking about backtesting, strategy, and all of that. I think, to be fair, you know, it depends on the trader.
Okay.
It depends on the trader, because now we don't have the exact figure to say, do this, look at this 10 times, then you're going to be accurate.
Yeah.
It doesn't work like that. But it depends on a trader and how confident you are now with that after what you saw. Okay. Right? I might come and say, all right, I want to see this play out 50 times before my confidence is there. And then you might come and say, I prefer 80 times. You see, between the both of us, there's no one who's wrong or who's right. It just goes on how you're comfortable with. Okay. Right? But what I would say, get enough data.
Enough data.
How many is enough? I don't know. You will know. Just to be fair, they will know. Okay. I mean, when I do my back testing, I take screenshots. I don't have, the exact number to say I'm going to take 5. Now I just do screenshots. And then, of course, we then need to pay attention to detail on those setups. And I think by doing that, automatically you'd want to take more. Yeah. If that makes sense.
It does. It does.
100%. Yeah. So I would say it depends on the trader. Get enough data and see how it plays out, study how it plays out. Then you will know.
Okay. Yeah. If I can add, sure. For myself, I would. So I work it in cycles, right? Okay. So the market moves in 3 to 5 cycles. It will generally go up between 3 and 5, and then it changes trend now. Okay. All right. So I would have, example, 7 cycles. So in the one folder, I have taken screenshots 3 to 5 times of that same setup. Then I move on to the next folder. 3 to 5 and so forth. Okay, So I study every folder. Did number 1 differ from number 5?
There we go.
Or did number 3 differ from number 7? And so then now they can go and say, I'm only doing it on gold. I'm only doing it with the dollar index. And now that data that you're referring to, you start to accumulate the data that on this folder, I did it during 8 o'clock in the morning. The second folder, I did it at 12 midday. At 3 p.m. when the US session opens or whatever. So now you have the same asset in a folder, different time, different sessions, and you accumulate the data where you're able to speak about that specific asset in any time of the day. You can wake you up at 2, 3 a.m. in the morning and you'll know, this is what that asset does at this time. I'm not getting into it. I will wait for 10 p.m. because that's when I normally see it, because the data has revealed that to me.
There we go. So now we're talking about great detail now, paying attention to that detail.
Yes.
And fully understanding. The reason I didn't break it down, and I just broke it down saying you look at the times. When you do your back testing, your journaling.
Yes.
It's important that at some point you take a look at now the days and the times you enter the market.
100%.
Because you might find that through your back testing, you can see that every Monday at 1, you make losses.
Yeah.
That's something to really understand.
Exactly, bro.
Yeah.
Why do you at 1 p.m.? What's wrong with that chart? Like,
see? So then I simply break it down, and then I say to the guys, don't trade on that time.
Just don't.
Don't, because you're making losses. Don't. And then
Exactly.
if you see that on Wednesday, you make more wins than losses.
Okay.
Trade on a Wednesday. That's it.
So then, bro, I acknowledge everything and what you've said. 100%, I agree with it.
100%.
If you're making losses at 1, try to see what happens at 6.
Yeah.
You know, can we also say then we attach this to the setup? Maybe your setup doesn't have that detail to play out at 1 o'clock.
There we go.
And so now maybe your setup is more for 6 p.m. because of what has happened, right?
There we go.
Okay, so taking a few steps back then, just to quickly go back in what we've discussed so we can move, right?
Yeah.
We understand the structure of a position.
Yeah.
All right, that's 100%. We understand there's no such thing as a perfect entry, no such
Never.
thing as a perfect exit.
Never.
It's subjective, depends on the spread, but in us, depth of market, depends if you are trading medium, long, short term, right? We also understand that you can use certain tools
Yep.
to solidify
There we go.
your risk to reward ratio
There we go.
using market structure.
Yep.
And that is, if you'd agree with me, bro, one of the most powerful forms of analysis. If you just take price action, market structure, the direction of the trend, you will be okay. You can add your indicators.
You can.
You can add them to that. But if you have that foundation,
There we go.
you are okay, right? In conclusion, then, we understand that there's not a set amount of numbers that you can say you have to analyze it 50 times for you to know your setup works. You can analyze, but maybe after 200 times it works.
Yeah.
You just have to look at the details, look at the time, look at what specific seasons of the year that the gold moves more. If it moves maybe in the middle of the year more than what it moves at the end of the year.
Yeah.
And vice versa. And that goes with stocks, with oil. I mean, we
Yeah.
know oil is highly driven by fundamentals,
Yeah.
the supply and demand. So you have to look at those intricacies as well. Would you agree, bro, that I actually covered what we've actually discussed?
You broke it down, my man. You just
Okay.
summarized it to the guys.
Okay.
And what's critical here is really understanding and studying that data.
That data.
I mean, I've heard traders that are, profitable. They said they've backtested 6 months of data. And imagine how many
That's
data.
half a year, bro.
See? Yeah. It depends on how really you want it and how confident are you with the setup. The moment someone tells me, hey, I've analyzed like this, and look, we understand that there's a time where we learn first, right? But now, if you understand your plan, your strategy, and then the moment you ask me, I entered there, do you think it's right? Hesh.
Yeah, no, do you think it's right? Hey, man, that's a subjective answer.
Yeah, that's very because now the reason you entered there is you should have followed some rules.
Your rules.
Your rules, the strategy.
That you put in place.
There we go. So now, if you follow those rules, number one, it should be the rules that you understand, that you've seen played out.
Exactly.
And then automatically you're going to have confidence, right, about that. So if you enter the market according to what you know, then look, just close your laptop because you know.
You know it.
You know the probabilities.
Yes.
Right? Even if you take a loss, following the rules is fun. Because we know strategy sometimes they do take losses as well.
Yes.
So I think you broke it down, my man, to the T.
To the T, right?
And these are gems.
It's gems, bro.
100%.
So, guys, maybe just in conclusion on that, don't forget that technical setup that me and T now, broke down. And T did mention that we do discuss it in the classes. You got to get with us where to put a more probable stop loss instead of one that's highly unlikely not to work out, right? I have a game for us, bro.
Whew. Game.
It's so there's about 7 things. Okay, so I'm gonna mention a name or a specific concept, and you tell me the first thing that comes to mind. We've seen it before, through other guys, but I just want to kind of just bring it in just to see
Alright.
what your way your mind is at.
All right, so you're gonna say something, name something.
Yeah.
First thing that pops up to mind.
Exactly.
So
Right?
it must just be like a word.
Just a word or a small phrase, whatever comes to your mind, how to describe it or what you think. It's just your thoughts around it. Okay? Just your thoughts, and let's keep it nice, organic, very authentic. Because it's nice to get into people's minds now and then, and I think that's what you and I do.
Yeah.
When we speak into the guys, we get into their heads to see how they think about the markets, asking them questions. Yeah.
All right.
Okay. Are you ready?
Wait, before, so it can be a phrase or a sentence or just a word.
Just
anything.
your thoughts
All
on
right,
it.
let's go.
You ready?
Ready.
All right. Donald Trump.
Profits. Hey man, when Donald Trump was the president, man, the market moved. The markets moved.
It did, bro.
The guys knew.
And they said it wasn't, eh?
Yeah, actually moved, man.
It moved. They said it's that the dollar's gonna drop, but it actually became more
Moved, man.
valuable.
There were like nice movements there. But yeah, profits.
All right, profits.
Yeah.
Support.
Buy. Hey, man, what?
Resistance.
Ceiling.
All right. Trend line.
Yo. Trend line. Hey, you know.
I wanted to bring in a wild card there.
Hey, like so there's a lot of things now in my mind.
First thing in your trend line.
Trend line.
All right, let's move. Breakout.
Breakout.
Okay.
Yeah.
Money.
Life.
Ooh.
No. Scrap that.
Scrap that.
No, not life.
Okay.
Happiness. I would say happiness.
Happiness. Okay, happiness. Sandwich.
Yo, Dagwood.
I thought you were gonna say like maybe satisfaction or hunger or something, but it's like you know.
That's my favorite sandwich, man. Dagwood.
Guys, they're goods. We want them.
Yeah. Or Philly cheese steak. Yeah.
All right, last one. Ketchup.
Tomato sauce. Hey, my answers are wild.
There you go, guys. This is episode 10, guys. Good entries, bad entries. Drop a comment. What do you guys think? We are willing to hear what you guys have to say as always. Brother, always a pleasure, man.
It was a nice one. I enjoyed it.
Yeah.
Topic was proper.
Yeah. Entries, exits.
Yeah.
So, guys, join us again for our next episode. We are looking forward to being with you guys once again. And don't forget to subscribe. Get on the channel, guys. TD Markets. That's on YouTube, Facebook as well. That's TD Markets. And don't forget to join us in our classes. T, you want to take us out, brother?
Yeah, 100%. I hope you guys enjoyed the session. As said, join us on all social media platforms. If you guys want more info, we've got Facebook, we've got Instagram. Join us there. You can send us an email to care@tdmarkets.com. And yeah, we're looking forward to engaging with you guys, to see you guys. I mean, we're based in Sandton, Joburg. And yeah, let's keep it moving.
All right. Guys, till the next one. See you soon.